bears are winning and some opportunities started to appear in the market. So get your cash ready. Good morning, everyone. This is Ahmed Saleh, and this is the weekly market recap. Okay, now to the key messages. Market continued to go down for the fourth week. We are now back to September 24th level. Last week was a very tough week until Friday when it rebounded. So Nasdaq continued downward, and today Nasdaq is about 12% from the peak. S&P continued also the downward trend, and now it's 8% from the top. Russell is down 16% from the top. The good news is that momentum stocks are now rebounding. We started to see some opportunities now appearing in the market. There are some recovery that happened on Friday, mainly because of the CPI report and avoiding the government shutdown. So get your cash ready. We might be forming a bottom. Now to the details. Last week was a very tough week. We had minus 2.4 in each of S&P and S&P equal weight, and we had minus 2.6% in Nasdaq. The year to date is now getting more and more in red. And from the top, Nasdaq and Russell 2000 is in a correction territory. S&P was in the correction territory, which is defined as 10% from the top. But we had a good rebound on Friday. If you look at the below chart, you will see that the market rebounded by more than 2% on Friday. That's mainly because of avoiding government shutdown and because we had a good CPI report on Wednesday. Okay. Now, if we look to the chart, we are not out yet of the downward trend. We have some bottom forming on last week. So, and this was confirmed on Friday. So Friday closed above the last 4 days. It didn't go above the last week. We still need to see a week closing above last week to see that there is really a bottom. But at least it closed above 4 days, which is very good news. So now we have 3 options to go from here. Either this bottom that is forming now is not a bottom, we continue going downward next week, especially that Trump is having a lot of ideas to drop the market down. I think he's intentionally want the market to drop, maybe because he wants to buy from the bottom. But whenever the market is trying to go up, there is a news on tariff that is bringing the market down. Last week we tried to go up on Wednesday on the CPI report, which was a good one, but he came with another news on tariff, imposing 200% tariff on alcohol from Europe. So the market went down on Thursday, but because of avoiding government shutdown on Friday, the market went up. Now we have 3 options to go from here. Either we are forming a bottom, or we have a temporary bottom, or we have a permanent bottom. How we will know? We will only know next week. If the market is rebounding, then we can exclude the option 1, that is there is no bottom. We will have either the temporary or the permanent bottom. So we have to close 1 week above the prior week to say that we have really a temporary bottom or a permanent bottom. Okay, so far the major trend is down and we are going downward, but there are signs that a bottom is starting to be formed. Good signs are also appearing in the momentum. They were going down all through the last 3 weeks, but on last week they were rebounding. Most of them are rebounding, and some of them with really good values, right? So you have to keep an eye on these stocks because they might recover some of the losses that they had. They had huge losses. You can see here 20, 30, 40%. So they are now rebounding, and maybe they are forming a bottom, and we're starting to go up. This week we had a continuation of the drop on the companies that are going below the moving average 50. So we have only now 30% above moving average 50 and 70% below. And we have also 34% above the simple moving average 200 and 65% below simple moving average 200. So now when we see such things that we are starting to approach the 20s, then this means that the bottom is near. So we still need to see a confirmation on this in the coming couple of weeks, but so far as we are approaching the 20s and the 10, then we are approaching the bottom here. On the sector, we have the basic material still doing good, but the healthcare had a correction last week. Utilities and energy started to appear, they started to climb the ladder. upward. Technology and consumer cyclical is deep in red, and they are still going into red. So avoid these two sectors unless if there is a rebound that's happening. On the capitalization, there is no clear capitalization that is winning. Large and mid and mega are outperforming, but they are going down in the last few weeks. So focus on the sector that are winning. Next week, we have the Fed meeting. We should not have a surprise from the Fed. We have 98% probability that the Fed will keep the interest rate the same as today. So this is not going to be a surprise to the market. But really what we are waiting for is what he's going to say about the economy and if he's expecting the economy to stay robust. And we are expecting that he should calm down a little bit Wall Street and the investors and say that they are ready to react for whatever scenario that's going to happen. If he says these wars, then the market is going to stop going down and will form a bottom in this case. On the results season is over. We have just few results for NIO, Nike, and FedEx. For the trading strategy, gold and silver are still doing good. There are some expectations that gold will reach 3,500, so be ready to be there in case this happens. And for the US stocks, watch for a rebound on some of the hammer stocks that we talked previously. All right, that's all for the video this week. If you like the video, please press like and share it with your friends, subscribe to the channel, and put any question you have in the comment. This video is for educational purpose only and should not be considered as a financial advice. Any investment you make is at your own risk. Have a profitable trade, everyone. Thank you.